Mr. Javier Lumbreras, who is the founder and CEO of the Artemundi Global Fund, which we'll hear about very shortly. Javier comes from a family of collectors. He's in person involved also not only in the fund itself, but building his own personal collection, focusing on more on emerging contemporary artists around the world. He has been involved in banking, real estate, and is also is an author of the book called The Art of Collecting Art, which I guess is being published in its second edition, which means that must be very popular because the first edition's run out. So without further ado, I would like to introduce Javier Lumbreras, who can talk about the Artemundi Fund. Thank you.
Well, I'm originally from Spain, and I spent my high school years and then my college years between England and the UK and the United States. And I'm based in Miami with offices primarily with a lot of emphasis in Latin America, especially Mexico, and also in Spain. When I'm asked what is it, people ask me, what are you doing? What is it that you do? I like to consider myself as somebody who's devoted to the art world in all of its, as far as I can reach it. The fund specializes on acquiring fine works of art from all master paintings to the end of the 20th century. And that is a very large spectrum. And then my personal collection focuses on artists from the 21st century. I think that there's been some fundamental changes in art as an asset and in art as an investment. Why? I think the first thing that has affected the art as a real and tangible asset has been the internet. Thanks to the internet and all the indexes that have been compiled, now we can very well predict the value of a painting. And you don't need sometimes an expert. You can just go to ArtNet and any companies and do a research, and you can just say, well, okay, I'm going to look for a Dora Maar Picasso 1939 of 80 by 100 centimeters from 1934. You put all that information on the database, and it's going to give you 3 or 4 or 5 other comparables. And it's very easy. If those paintings are selling between $5 or $6 million, chances are that yours is between $5 and $6 million as well. Well, you always need the expert, because it happens, for instance, in Latin America. If you have a Dora Maar that has a black cat in it, people don't want it. Or if you have, for instance, a nude painting of a woman, a nude painting of a man, most people will go for the nude of the woman. So, and there are other very important issues like the state of conservation of the painting, that the painting has good provenance, that there is no links in the painting, that it doesn't have a craquelure. I mean, all sorts of things, that underlying things that you don't see on the surface of the painting, and you need an expert to advise you. So that's why, since art becomes a real and tangible asset, I think that now we can have almost like fractional ownership. And when I first wrote my book in 1999-2000, I thought that an art investment fund would be a logical evolution of the art market, because we have a way to prove that it's a real and tangible asset, that it can be used as a hedge against inflation. You can use art to diversify a portfolio where you lower your risk with the same returns. The problems with the art funds, which we'll discuss later probably, is first, we don't have a track record, or a well-established track record. Second is the problem with raising capital for the art funds. So let me see if I can work this thing. Artemundi Global Fund is a diversified private equity fund with a strategic portfolio that covers $500 million, like I said before, recognized artists with strong track records. We acquire outstanding examples of fine art in calculated categories, in order to preserve a capital and earn an attractive rate of return. Some of the facts from the fund, which, this you can see through our webpage, and we can discuss later, but this some of our objectives with the subscription. It's a 5-year fund. I think most funds, 5 years is a very short term. Art performs the best in the longer term. So it's 5-year expandable to a 6th and a 7th year. The net asset value is calculated quarterly independently by our appraisers and fund administrator. We define our strategy with 6 basic principles. We identify artists and paintings with a proven track record. We focus on specific genres, subject matters, themes, and formats. We think size is very important, and we prefer to go for smaller size paintings. We team with best partners in the industry, whether it's our dealers, galleries, collectors, or auction houses around the world. We control the exit strategy. This is very important, but it's a long subject to talk about. And we reduce the overall risk and produce attractive returns while preserving patrimony. Our five alpha standards are quality, rarity, condition, provenance, and price. There are others, but those are primarily the most important. And like I said before, we prefer smaller portable formats for many various reasons. One of them is, generally speaking, we prefer small gems over very large paintings because it's easier to move them from one country to another, easier to transport, and we also loan our portfolio to the investors in the fund. The way we diversify the portfolio, we reserve 16% of cash for opportunistic operations, 60% we invest in post-war and contemporary, 16% in old masters, and 52% on 19th century impressionist modern, and with an emphasis on modern Latin American paintings, with 20% of the portfolio invested in works like Frida Kahlo, Diego Rivera, Wilfredo Lam, Roberto Mata, and the like. This is another distribution of the collection. Like I said, all masters from the 15th to the 18th century, European all masters from the Netherlands, France, Spain, Italy, England, and Germany. This is the allocation of the fund is 16%. The characteristics of the art, we think, is an art with a limited availability of signature pieces. Not all of the paintings are signed. There's a lot of problems with attribution. It requires a high level of connoisseurship. Strong relationship with museums, galleries, academic institutions are vital, and subject matter is very important. In all master paintings, a landscape by Bruegel prevails over a very difficult painting by Giuseppe Rivera of a saint that is mutilating himself, for example. Characteristics of the market is the price indexes in this field can be misleading, in my opinion. It's a stable market. It has less volatility. It's relatively immune to larger economic factors, although in our last recession we've seen that this is also not true. And it's very difficult for inexperienced collectors to penetrate with assurance. The collection, too, is Impressionist 19th century. Like I said before, I'm going to make it short because I don't have a lot of time. And the characteristics of the art is that it requires less level of connoisseurship, and it's stable, fairly competitive. There are some authentication difficulties, but it's a very interesting market, and we base the strength of our portfolio on Impressionist and modern paintings. The collection 3 is contemporary art, which includes also emerging artists like China, India, and Russia. Characteristics of the art is there's great variations in style, themes, and techniques, formats. There's higher risk, higher returns. There's minimal problems with authentication, provenance, minimal problems also. It requires, well, we can read. I'm just going to go fast. One of our axioms is profit in our transactions are produced at purchase, not at sale. Our insist on financial instincts. We keep the collection maintained and cost in control, and we avoid redundant commissions. It's been our experience that the art market, like Michael from Artbest was saying before, is very inefficient in terms of the cost of transactions is extremely high. If we buy exclusively from our auctions, we lose about half of our gross profits to the auction houses. We avoid, like I said, we avoid redundant commissions, and Artemundi management principles is we are very personal and dynamic relationship with investors. This year we have loaned works to the Kunstforum in Vienna, paintings that we've loaned to the museums in order to add value to the works. We've loaned works to the Martin Group in Berlin, to the Pallant House in the UK, Salisbury Century for the Viewers and Arts in the UK, Museum of Modern Art in Mexico City, the Instituto Cultural Cabañas, Antiguo Colegio San Ildefonso, and also a couple of works to the Museum of Modern Art and the Centre Georges Pompidou. One of our strategic advantages I like to highlight that the investors are permitted to hang the paintings from the fund in their home or office on a revolving basis. And yes, This is a little bit of the investment process overview. A manager and the art advisory committee make an assessment of an investment. Then it goes through valuation. The manager and the art advising committee considers the artwork appraised value with inputs from the industry third leading parties. Then in due diligence and final approval through examination, legal, tax, entitlement, and financial and other general business issues are reviewed. Closing the monitoring, through active management, we include a continuous assessment of the investment and time and implementation of the exit strategy. What that means is that we don't necessarily hold an asset for 5 years or 7 years, which is the length of the fund. Sometimes, if for instance, Gabriel Orozco, he just had an exhibition at the MoMA now on the Centre Pompidou. We bought this painting from about $135,000 in the middle of the crisis, 2008. We thought that the market was ready for the artist. We put it at an auction. We realized for $450,000 on the same painting that we bought just a few months ago for $130,000. We add value to art by loaning works to museums and exhibitions worldwide, like I said before. This is a valuation scale. In the valuation scale, we look at things such as provenance, exhibition, literature, authenticity from experts, appraisal, etc. We make a description of the work, and we go through what we call the article scale, and we give importance to things such as the work being recognized by a major work within the of the artist. We look at the quality, the rarity, condition, provenance, and price that we said before. We look at things such as on the valuation scale, the cash flow scale. We look at the wow factor. I think it's very important. You look at a painting, you go, wow. If there's no wow, sometimes it might not be worth it. And we look at things like portability. I think portability is essential. And then we give it a price and an exit strategy with a return. We have, but again, like we said before, and with this I'm going to be done. As an art investment fund, and given the lack of the track record, we had to adjust, and we had a flexibility structure. We created a very big platform to being able to manage a couple $100 million on investments. We're only on our 6th month on fundraising. We still have another year and a half to go. We have about 60 paintings in the portfolio. And I think we're doing quite well. We've had nice returns. We look at another slide later on. But we created something what we call individual management accounts. We've been making presentations in Switzerland, Italy, Latin America, and other venues. And what we found through money asset managers and family offices and things like that is that they were very reluctant to invest in a fund that keeps the title of the artwork and at the same time is the custodian of the paintings. A lot of the family offices said, well, I like very much your structure, I like very much your strategy, but we would like to hold on to the asset and we would like to be the custodians of the painting. And then we created what we call the individual management accounts, which basically, with the structure of the fund, we have the same portfolio and with the same platform, we give all that expertise to the individual management accounts. We build their own portfolio, and what we do is we don't have any upfront fees. We only make success fees at the end of the portfolio. And finally, the last thing we do is we also build our foundations. Our foundations such as, there's a text there, it's quite interesting, but it's very long. And basically what we do is we believe in the sample, like the example of the Thyssen in Madrid. And I think that art is a real intangible asset. It can hold its value and is an excellent way of preserving patrimony, lineage, and giving something for the people that come behind you. And there's actually one slide that was missing, but I don't think it's very important. It's one of the foundations and the way we set it up. Not only we do all the structure, but we also set the legal funding for the foundation in order to give it a final home. Whether it's been right now, we're negotiating with the state in Spain, in All Castilla, for a foundation where the government is providing with an old Jesuit school from the 15th century and a church, and that all of that is being converted into a foundation. We manage right now 4 foundations. One of them has 12. We have more than 2,000 works of art under management from 3 individual foundations. And I think I exceeded my 10 minutes.